Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I have recently put together my own watch list, which I normally do. So I do, every 3 months I put together a watch list of companies that I would like to add to. So I look at my portfolio and I see companies that I am very bullish on that are currently potentially trading slightly lower than where they should be, below the intrinsic value if you like. And then what I do is also do a little bit more research to find companies that will potentially make the portfolio better. And then I add it to the watch list, and then if they hit the price, the price that I'm looking for normally, then I'll add to the portfolio. So this is one of the probably the best thing that I have done over the last 5 years, and it really genuinely helps me stay grounded and don't just buy basically anything, like genuinely. And the reason I said that is because once I've created the watch list, I just take a picture of it. I know what my basically price target is for every single company. I put for example, if I'm buying, say for example, Broadcom, I will put a watch, basically stock watch kind of thing, where it basically gives me whenever it hits that price, I get notification from Trading 212. Then I can just look at it to see if there is anything I need to know about the company that has changed, whatever. And if I feel comfortable enough, then I'll buy more of that company, or even if it's a new company, I will add it to the portfolio. And that's really good. And this is what we always talk about. We've always said stay disciplined, focus on the things that you can control, and focus on forget about the news of what is happening outside. Buy companies that are high quality businesses when they are, especially when they're undervalued. So what I'm going to do today is share with you guys 7 companies that are on my watch list for the next 3 months, inshallah. But before we get to that, I just want to talk about 2 things. First of all, join us in the Patreon account if you haven't, where you get access to a lot of things. And one of the new things is basically the subscriber portfolio reviews. Thank you for the brothers who've actually emailed me their link. I'm going to look at that inshallah in the next couple of days, and I'll get back to you. And also you get questions and answer basically from a lot of brothers. So I'm actually trying to keep up inshallah just with the community side of things here, just to answer all your questions. Now this is the subscriber thing that I'm talking about, the portfolio. If you would like me to look at your portfolio to give you some feedback, and then of course tell me all this information here, and then go into the subscriber portfolio and just type the ticker symbol of your company, or just type the name of the company and how much of it do you own. So like how many shares you own and how much of that is for your portfolio. And then what I'm going to do is I'm going to give you my opinion on what I genuinely think. But please make sure these companies are Sharia compliant, because it's important. Because I've already identified one of the portfolio that I was sent to. There's one company that's not Sharia compliant, and what I mean by Sharia compliant is some companies can change over the last whatever month or whatever, but I'm talking about companies who who have a business that are definitely not Sharia compliant. So like a bank, for example, you just be careful with those. And if you've got those, send it through anyway, but I will definitely let you know basically in my opinion, inshallah. So that's basically that's it for that part. And as always, please like the video, subscribe to the channel, of course, and if you can join us in the Patreon account, that would be absolutely amazing. So here we go. This is what I want to talk about today. So I'm going to talk about the company, the price currently, the 365-day change, okay, today's change, the last 12 months, and then target price, Morningstar, price from Seeking Alpha. So these two are the price targets from these 2 companies. Remember, Seeking Alpha uses Wall Street analysts. Morningstar uses, for example, discounted cash flow models to come up with intrinsic value for the business. And then I'm going to average the 2 out. Then I'm going to add a margin of safety from 5% to 15%. If I think the company is very volatile, is very risky, I normally like to give myself 10% to 15%, depending on how risky it is. If it's a company that I feel like is safe, then I keep it normally 5%. And then my ideal price. Okay, what's my ideal entry price, and then the buy, and then buying price. Now, although the ideal entry price is basically comes from these here, and top of that I just add sometimes at least another 4%, 5% or whatever top of that, so to give myself my buying price for that stock. Although this could be a good one, I normally go with this one just to be on the safe side. Okay, and then this will tell me whether it's a buy right now, whether and or not. That's it. And we're going to look at the first company we're going to look at today is Salesforce. Salesforce is a company that I own in the family portfolio as well as my own portfolio. So I'm very bullish on this company. I'm very bullish of this company's growth and where it's heading. But as you can see here, current price $263 per share. Look at this chart here. It's gone up a lot and it has come down quite a lot over the last whatever months. In fact, basically for the last 12 months, it's actually up for basically 14%. But in comparison to where the other companies are, well, how other companies are performing, that's nowhere near that. Target price from Morningstar is $325 per share. Target price from Seeking Alpha Analyst is basically $354. So quite close. And my average price for this company is basically $340. Let's call that. Margin of safety about $17. So ideal entry price for this company $322 per share. But it is a buy for me right now. My buying price is basically 270, not that 370. If it hits 300, I'll probably stop buying. But $270 per share is basically where I think I should be buying this company. And as you can see here, the reason I said it's a buy for me right now is because look at the price right now, $263 per share. My buying price is 270. So I will be adding to this company either in the family portfolio, which I would normally share on the Patreon account, or in the dividend, this portfolio here. Okay, and I'm going to show you, before I move on, I'm going to show you exactly how many shares of this company I own. And as you can see, I'm up only 6%, and I do have about 15 shares right now. So inshallah, in the next few weeks, I'm going to basically add to the company as much as I can, just to build that maybe to at least 20 shares or so. Is one of my, right now, when you look at how much I have in each company, for example, pound wise, there is probably one of the lowest. In fact, I can show you. If we just change this slightly, put a value, is probably right at the bottom. So there you go, 2,800 is basically, because in comparison to companies like almost £10,000. So inshallah, it's not just about the prices, but I just want to make sure that inshallah I want to continue adding to that company in the next couple of weeks, inshallah. Right, so the next one that we're going to talk about today, and before I move on, let me just show you one more thing about this company. Now, in terms of over the last whatever years, in terms of the annualized rate of return, you can see it has beaten the S&P 500 quite a lot of the times. And moving forward, like if we look at historically, when we click max, for example, the company was trading at some point, had the operating earnings growth rate of basically about 34%, which is absolutely huge. And we're looking at a normal PE for this company around that time of 95. So it has been trading basically very expensively for a long time. And then when you reduce it to 10 years, this now is reduced to 26%. This is now almost half of that, 46%. And when you look at the last 5 years, it still looks undervalued, basically. So right now, we look at the fair value basically for multiples of 22 right now and a normal of 33. And then basically, we're talking about 22.5% of earnings growth rate. Per annum, that is, by the way. If we click forecast, for example, and we look using the estimates, which is in 2025, basically they're expecting about 24%. In 2026, they're expecting about 10, or let's call it about 11%, and then 11% in 2027, and 2028 about 14%. So that is basically the earnings growth expected for this company moving forward. And this is basically based on that. It is right now, basically, if you buy it right now, you'll be losing about 7%. But if you use the normal multiple for this company, okay, in the long run, you will see basically we're looking about 35% total annualized rate of return, or 123% over that period of time. So 2028, January of 31st of January 2028, you could be looking at least, if you invested 10,000, you could be looking at least 22,000 plus. Basically, you will be doubling your money. So I own the company already, and I'm planning to add to it in the next few months. The next one is Qualcomm, another one that I own, has not done well at all. As you can see, it has come down quite a bit, at 30% when it comes to the last 12 months actually. Target price is $170 per share. Target price from Seeking Alpha is basically $172. So very similar. The average about 771. Margin of safety, I just put 5% by the way for this one as well. As you can see, is about £9 or so. And ideal entry $162 per share. My ideal though is basically $145 per share, because I do own the company already in the portfolio. So for that reason, I think my average, I can show you what my average is for this company. Here we go. if we go on here, there you are, you can see it's $125 per share, and basically what I put down is 140. So I'm planning to average up because I really like this company. It's a very high quality business, and you know, they're expecting, I'll show you what. For this one, I'm just going to go over otherwise the video is going to be long. So I'm going to show you the forecast for each one of the companies moving forward now. So as you can see here for the estimates for this company, we're looking at the about 3% when it comes to earnings growth rate, which is not great, but you got that earnings, basically EPS yield of about 7%, normally 6% or higher. That's what we're normally looking for. So that's absolutely fine. So if we bought it right now, this stock, based on the estimates that are basically 15% in 2025, and then 2026 about 2%, and then 1% in 2027. Basically we're looking at about 7% growth, which is absolutely fine. So you're getting about 7%. If you invested 10,000, you'll be making almost to $12,000 or whatever. And now if we look at the normal PE for this company, it's still the same, basically an earnings growth rate, but PE is about now normal PE about 16. We are making about 13%, so it's slightly more. Instead of 12,000, we're making about £13,500 or dollars, whichever. Okay, so another really great company. I like it. I have had it in the portfolio quite some time, so we'll see how that goes. Union Pacific is the next one, another one that has not done much this year, almost a flat. If you can see here, it's gone up a lot. It has come down. A very, very cyclical business, and because of the tariffs and everything else, it has come down quite a bit. So it will be interesting to see how it goes. $214 per share is basically the Morningstar target price. Target price from Seeking Alpha is 242, so it's slightly higher. Average about 228. Margin of safety about 5% as well, about $11. Ideal entry $216 per share. I just said 250, so I'm just gonna wait right now. If it hits maybe 215 to 210, then I will definitely be adding to it. And to show you how many shares I have of this company, as you can see, I've got about 28 shares right now. $206 per share is basically my average right now, or 159 or 100, let's call it $160 per share. And right now is about $206 per share, and right now it's about 219. So overall, I'm actually planning to average up if I need to, because this is a very long-term hold for me, definitely. So using fast graph as well, as you can see, we've got earnings growth rate about 9%, which is really good. 15 PE, we will be basically flat for if we bought it now, and by in 2027 basically you will still be, this basically will not actually make any money on this. If you click the normal PE, however, you'll be making about 17%, so your 10,000 investment will be about 15,000 investment, which is quite nice. So per annum total annualized rate of return of 17%. The next one that we're looking at today is Merck. Merck is another one that has been not done well at all. As you can see, it's gone down every single month, whatever, 38% for in the last 12 months, and target price is $111 per share. Target price from Seeking Alpha is $101, and average is about 106. Then I've got a bit of a margin of safety, about 5%. Annual, basically what I'm expecting is basically about $80 per share. I'm not buying 100 in this company because my average, I'll show you in a second, I think it's about 70 something or whatever it was. So $80 per share is probably the price, but right now it's 78, so I can't, basically I'm still buying. That's why it says a buy here. So I'm slightly in the red with this one, just about 2%, as you can see here. And in fact, it would be, you know, when it's a lot of it is because the FX impact. Otherwise, it would be actually it would still be in the red, about 1%. Anyway, overall, I've got 79.6. So right now, about 80 shares. I want to get to 100 shares, inshallah, and that is the long-term plan. But as you can see here, about $80 per share is where my price is right now. Is about 78. So if we look at a fast graph as well, as you can see here, looking at the normal estimate for about 10% when it comes to earnings growth rate expected for the next whatever years, you will be right now, if you invest in this company, you will be doubling your money. So 10,000 would give you about 20,600 basically in 2027. So basically next 2 years you could actually double your money if you invested in this company based on the normal estimate of that 10%. Now they have a key true that I think in 2030, I can't remember exactly, I think it's 2030 that the patent runs out, but they do have other products that are actually doing well, and a few of them that are still on the pipeline. So it will be interesting to see how it goes in the next few years. If we use the normal multiple for this company, more or less I think it'll probably be around the same. There we go. So not a huge difference. It's about basically 20,300 basically. So you will be, either way, you'll be doubling your money even if you bought this stock right now. And this is one of the reasons why I'm still buying basically as I go along from now on. Now, if you have not pressed that like button, please do so. We got three more to go. Genuinely helps the channel. Now the next one is not one that I actually have in the portfolio already, and this is ServiceNow. This company is what I've talked about this so many times, and every time I try to buy it, it's actually I just realized it's too overvalued. Very similar to Salesforce, but I really like both companies. And you know, working in technology side of things, I really like their business model. It's very similar to Salesforce, but like I said, but I feel like it has something else to it. So I might actually do a whole video on this one, but it's been on my watch list for quite some time. And look at this one, 38% up basically for the last 12 months, which is absolutely crazy. Now target price is basically just over $1,000. Same thing for Seeking Alpha, for average about 1,047. Margin of safety about, basically we're talking about basically I think I put myself 10%. I took 10% off because I think this is slightly risky, and because I'm starting new position, I'm already disadvantaged, so I just want to make sure I start it right. Ideal price, basically we're talking about 942. That I'm happy with. If I can get it around 942, I potentially will be adding this to the portfolio, but this will be for the family portfolio if I were actually to buy this stock. And look at this chart, how crazy that is. That shows is how expensive this stock is. If I were to buy now with that 19 earnings growth rate, with that 19 PE, you will be losing. Your 10,000 will become 4,500, which is absolutely ridiculous. But if we use, so we're talking about now fair value ratio about 19 multiple. But if we use the normal multiple, which is what Mr. Market likes to trade this company, that's about 84 multiple. And for that reason, right now, if you bought this stock, you'll be making about 30%. So basically you'll be doubling your money, 97%, almost 98%, or 19,800 US dollars. That 10,000 basically will become that. So it depends on basically what you use. It seems a bit more expensive, and as you can see here, 2025 is basically we're expecting about 20% growth, 19% growth, and another 19% growth. So it has a better growth overall. However, seems expensive. I might not even change this slightly, to be honest. I will see how it goes. But before I actually buy the stock, I will be doing another full analysis to make sure I'm actually doing the right thing, because maybe this might be even too expensive. You never know. You have to always be careful. The next one is the one I have in the family portfolio, and this is Adobe, $383 per share. As you can see, it has come down a lot, then it's gone up and then went down again after earnings recently. 26% down for the basically for the last 12 months. Target price about 590 and almost to 500 from Seeking Alpha, which is very interesting. And that basically means the company right now, the average is 540, and margin of safety, I think I've given myself 10% as well, because I'm just 5% is fine. I'm comfortable, but I've given myself another 5% just because if this AI situation doesn't work out for them, then what, you know? And then ideal price is $486 per share, but I want to buy it at 400, which means basically right now for me is a buy. I own in the family portfolio, and I will be buying more of it inshallah in the near future. I will of course every time I buy or sell anything on the family portfolio, I actually add it to the Patreon account. So if you haven't joined us, then please do so. Now, in terms of the fast graph, as you can see here, if we're using normal PE, so about 11-12% growth expected from this company. If you buy it right now, it's almost you're losing about 2% in the next basically 2 years. If you're using the normal multiple for this business, then you will be making a lot of money, because that 38, although I don't like that 38, is quite high. Basically, you will be making about 24,400 of that basically for just buying the stock right now with 10,000 US dollars. Again, so it has a massive upside. Even if you bought it right now with the normal estimate, okay, that 2%, I think you will still make money regardless in the long run, because this is a high quality business. And I think with the AI situation, once they start basically getting hang of it and start implementing a lot of these AI into these features into their software, then I think they will do really well. And the final company we're going to talk about today, Deckers Outdoor, another company that I have in the family portfolio, down 40% basically in the last 12 months. $120 per share is where they think the price should be in terms from Morningstar. Same goes for 127 from Seeking Alpha. Average is about 123. The margin of safety about 6. Well, I think I've given myself 5%. Like I said, I do own this one already in the family portfolio, so my buy price right now is about $100 per share. Is about $102. So right now it's still a buy for me. I would definitely wouldn't mind adding this one, just to add to it right now. And I think I can't remember exactly my price, but if you want to know, just join us to the Patreon account like I said. And as you can see, we got about 8% when it comes to earnings growth and 15 PE. That's what we're expecting right now. If you bought it with the normal basically multiple, that is about 4% upside from where we are. The normal PE, that's for the estimates, by the way, which is, if you look at this, 2026 they're expecting it to decline. 2025 is about 30%. 2025 they're expecting it to decline. I think a lot of it is because of the tariff situation, and 2027 there's about 12%, 13% upside, and then 2020, sorry, not upside, earnings growth rate, as well as basically 15% in the 2028. So just very interesting in terms of growth side of things. If we click normal, as you can see, it's still the same, about 20 PE, and instead of that 15. And if you invested 10,000, you will have in 2028 you will have about 15,400, which is basically fine. So I genuinely think it's buy right now for me. So in the next few weeks, inshallah, I will basically be adding a little bit as much as I can to the. So these two are in the family portfolio. So if you want to know, just join us to the Patreon account. The other 3 or 4 I've already shared that with you guys, and when I do buy this one I will let you guys know. But before then, of course, I'm going to do basically a whole video on that one. If you have not basically shared your portfolio yet, please do so. It will take you a couple of minutes to do that. And genuinely, I'm going to be honest and transparent with you guys. I'm going to tell you exactly what I think about each one of the companies in your portfolios. And yeah, of course, like I always get comments about mine, so it's about time actually I start commenting on yours as well. And there's a lot of brothers who actually genuinely share their portfolios day in, day out. You guys fill this in. Just let me rip it apart and just tell you what I think about your portfolios. I'm just kidding. Wallahi, I'm just going to be honest, inshallah, and just hopefully it will help me. I'm sure it will help you as well in the long run. And especially if you're new to the market, sometimes it's nicer to have basically another opinion. It's just an opinion. I'm not giving you any financial advice, to be honest. So yeah, let me know, inshallah. Sorry for making the video longer, but I just really needed you guys to know that there's a process. You need to stick with your process and know exactly what you're doing. So what I've done now is each one of these basically prices I've added to my basically different accounts, whatever. So as soon as it hits that price, it will let me know. And some of them are below that, so I'm already buying them, inshallah, and I'll share that with you guys. Have a wonderful day. Assalamu Alaikum.